Hello and welcome to the channel Just Try. Here I am Dr. Anurada Shah in front of you all with a series of videos on sample question papers. I have solved the sample question papers for you all, and here we will be discussing one after the other all the questions that you have in the sample question papers, because you all are facing difficulties and have seen that children with difficulties can't go to the boards, so I've solved them for you all. Now first, let us discuss about the question paper. Let us understand the question paper. So in the question paper, we see that questions 1 to 16 and 27 to 30. These questions are of 1 marks each, and question number 17 to 20 and 31, 32 comes with a 3 marks question, and the next questions, that is 21, 22 and 33, comes with a 4 marks, and the rest, that is 23 to 26 and 34, comes with a 6 marks. So this is a question pattern that is going to come for you all, which is coming over the last few years. So please maintain that format, and please note that all the questions are compulsory, and the questions that are coming to you all will not come as an overall or will not be there, or any choice will not be there. It's a compulsory question paper, but the questions will have internal ors. That is, internal choices will be there. Maybe in selected few questions, you will be getting a few options, so you can utilize that. So that means all the chapters becomes compulsory to you all, and everything is important, everything is necessary to be studied. Now, through this sample question paper, you can understand that yes, which areas you're going to focus more, and we can solve a few important questions with you all. Also note that the question paper will be divided into two parts. One part will be partnership and companies, part A, and the second part will be analysis of financial statements. Usually the first part contains a major portion of your question paper, and the second part contains a lesser portion of your question paper. Now, if you talk about choices, then in that case you will see that 7 questions of 1 marks will have options. You will have 2 questions of 3 marks in options, and you will have 1 question of 4 marks in option and 2 questions of 6 marks in options. So you will get choices in so many questions. So now let's start solving the sample question paper one after the other. Now, this video will be of the 1 marks questions. After that, next again another video will be coming, which will be having questions consisting of 3 marks, next with 4 marks, and the last with 6 marks question paper. And finally, I'm going to make a full length video with the entire sample paper, right? So let's begin. So first, let us start with question number 1. Now here what we see is A and B are partners sharing profits and losses in the ratio 3:2. C is admitted, so it's a admission sum. Admission of partners, and for which 30,000 and 10,000 are credited as premium for goodwill to A and B respectively. The new profit sharing ratio, what will that be? Now there are 4 options here: 3:2:1, 12:8:5, 9:6:5, and 33:27:20. So the sacrificing ratio of A and B will be calculated as 3/4 into 1/4, that is 3/16, and B will be calculated as 1/4 into 1/4, that is 1/16. The new partner's share is equals to partner's old share plus partner's sacrificing share. That is, A's new share will be 3 by 5 minus 3 by 16, that is 33 by 80, and B's new share will be 3 by 5 minus 3 by 16, that is 33 by 80, and C's will be 1 by 4 into 20 by 20, that is 20 by 80. Now let's move on to question number 2. Assertion A: Batman, a partner in a firm with four partners, has advanced a loan of 50,000 rupees to the firm for the last 6 months of the financial year without any agreement. He claims an interest on loan of rupees 3,000 despite the firm being a loss for the year. Reason: in absence of any agreement in the partnership deed, provisions of Indian Partnership Act would apply. Alternatives: both assertion A and reason R are true, and reason R is the correct explanation of assertion A. Both assertion A and reason R are true, but reason R is not the correct explanation of assertion A. Assertion A is true, but reason is false. Assertion A is false, but reason is true. So read this correctly, properly, in detail explanation of the entire thing, and you will see that A, that is both assertion A and assertion R is true, and reason R is a correct explanation of assertion A will be the correct answer. Question number 3. If 10,000 shares of rupees 10 each were fortified for non-payment of the final call money of 3 rupees per share, and only 7,000 of these shares are reissued at the rate rupees 11 per share as fully paid up, then what is the minimum amount that the company must collect at the time of reissue of remaining 3,000 shares? Now, profit on forfeiture will be calculated for 3,000 shares as 3,000 into 7, that is 21,000. So, the minimum reissue amount of 3,000 shares is 3,000 into 10, that is 30,000, minus 21,000, that is 9,000. The or part of this question, another part of question number 3. On 1st of April 2022, Galaxy Limited has a balance of 8 lakhs in the securities premium account. During the year, the company issued 20,000 equity shares. 20,000 equity shares of rupees 10 is as bonus share. This is very important. And use the balance amount to write off losses on the issue of debenture of the issue size of 2 lakh, that is issue of 2 lakh 9% debenture of 100 each at a discount of 10%, redeemable at the rate 5% premium. The amount would be charged to the statement of profit and loss for the year for the loss on issue of debenture would be, the calculation will be, the remaining premium, securities premium after the bonus share will be 8 lakhs minus 2 lakhs, that is 6 lakhs, and the loss on the issue of debenture will be 2 lakhs into 10 plus 2 lakhs into 5, that is 20 lakhs, plus 10 lakhs, that is 30 lakhs. So the amount charged on the statement of profit and loss is 30 lakhs minus, that is 24 lakhs. Now, next question number 4. A, B, C, who were sharing profits and losses in the ratio of 4:3:2, decided to share the future profits and losses in the ratio of 2:3:4 with effect from 1st of April 2023. So here we get two profit and losses. amount. One is 4 is to 3 is to 2, and one is 2 is to 3 is to 4. The extract of their balance sheet as on 31st of March is the working compensation reserve will be 65,000. This is the amount. Now, at the time of reconstitution, a certain amount of claim on workers' compensation were determined, for which B's share of loss amounted to 5,000. The claim for workmen's compensation would be, the revaluation loss is 5,000 into 9 by 3, that is 15,000, and the outstanding workman's claim transferred for revaluation to revaluation account is 15,000. Total workman's claim is 65,000 plus 15,000, that is 80,000. Number 4 or question is, A, B, and C are the partnership business. A used 2 lakhs belonging to the firm without the information to other partners and made a profit of rupees 35,000 by using this amount. Which decision should be taken by the firm to rectify the situation? A need to return only 2 lakhs to the firm. A is required to return 35,000 to the firm, and A is required to repay the amount 35,000 only equally to to B and C, and D, A needs to return 2,35,000 to the firm. So all these 4 points we need to decide now. So we decide finally by seeing the above mentioned all the clauses that A needs to return 2,35,000 to the firm. Why? Because here the he has taken 2 lakhs from the firm without information and has made a profit of 35,000, and so he has to return the entire 2 lakhs and 35,000 to the firm. Interest on question number 5, interest on partner's loan is credited to the partner's fixed capital account, partner's current account, partner's loan account, or the partner's drawings account. The answer will be partner's loan account because you're taking a loan, so the interest will be going back to loan. So this is the correct answer. Okay, next question number 6. Alexa Limited purchased buildings from Siri Limited for 8 lakhs. The consideration was paid by issue of 6% debenture of 100 rupees each at a discount of 20%. The 6% debenture account is credited with, there are 4 options given over here. So we will do the calculation and see that 6% debentures amount will be 10,000 into 100, that is 10 lakhs, and number of debentures will be 8 lakhs divided by 80, that is 10,000 debentures. Okay, question number 6 or, which of the following statement is incorrect about the debentures? Interest on debenture is an appropriation of profit. Debenture holders are creditors of the company. Debenture is issued to the vendors at discount, and interest is not paid to the debenture issues as collateral security. So the correct answer will be interest on debentures is an appropriation of profits. Number 7, assertion a company is registered with an authorized capital of 5 lakhs equity shares of rupees 10 each, of which 2 lakh equity shares were issued and subscribed. All the money has been all the money has been called up except rupees 2 per share, which is declared as reserve capital. The share capital reflected in the balance sheet is as subscribed and fully paid up will be 0. The reason are that the reserve capital can be called up only at the time of winding up of the company. The alternatives are both the assertion A and R are true. Reason R is complete explanation of assertion A. Both assertion A and reason R are true, but reason R is not the correct explanation of assertion A. Assertion A is false, but reason is true. Assertion A is true, but reason is false. The correct answer will be both assertion A and reason R are true, and reason R is the correct explanation of assertion A. Now we move on to question number 8. G, S, and T were partners sharing profits at the ratio 3 is to 2 is to 1. G retires, so one person moves out, and all his dues towards the firm, including capital balance, accumulated profits, and losses, share revaluation gain amounted to rupees 5,80,000. Was being G was being paid 7 lakhs in full settlement. For giving that additional amount of 1,20,000, S was debited rupees 40,000. So determine the goodwill of the firm. So here are four options given over here. Let's see the calculation. Gaining ratio of T is 1 by 3. So the amount of G's goodwill paid by T was rupees 80,000. Goodwill of the firm is 80,000 into 3 by 1, that is 2,40,000. Now question number 8, or. Anu, Banu, and Chanu are partners. Chanu has been given a guarantee of minimum profit of rupees 8,000 by the firm. The firm suffered a loss of 5,000 during the year. Capital account of Banu be credited or debited by rupees 6,500, or it will be credited or debited by 1,500. Now the correct answer will be the total loss amount is 8,000 plus 5,000, that is 13,000. So the loss will be bared equally by Anu and Banu, and Banu's account will be debited by 13,000 into 1 by 2, that is 6,500. Now, question number 9 and 10. First, read the following hypothetical situation and answer both the questions on the basis of the given information. Richa and Anmol are partners sharing profits in the ratio of 3 is to 2 with capitals of rupees 2,50,000 and 1,50,000 respectively. Interest on capital is agreed at 6% per annum. Anmol is allowed a annual salary of rupees 12,500. During the end of the year 2023, March 31st, the profit of the year prior to the calculation of interest on capital but after charging Anmol's salary amounted to 62,000. A provision of 5% is to be made in respect of the manager's commission. Following is a profit and loss account. And see, this is a profit and loss account that is given over here. So you can check that the Anmol salary is written as 12,500. Now let's fill it up. So when we're doing the sum, we find that the interest on capital of Richa is 15,000, Anmol is 9,000, and what we can see over here, and this is already written in the question, 12,500, and we get the profit transferred to recharge capital as 20,940 and 13,960, and the profit and loss that is coming after manager's commission is 17 sorry 71,400. So the final answer will be, uh, the profit and loss is 71,400 and recharge capital is 20,940. So they are asking in the question the amount that is reflected in blank 1 will be 20,940, as we see over here that recharge capital account is 20,940. And next question, that is 10, we can see here that what will be the amount reflected in blank number 2. That is, if we see from this table, we find it is 71,400. Now, question number 11. In the absence of the agreement, partners are entitled to profit share in the capital ratio, commission for making additional sale, interest on loan and advances, salary for extra working hours, or interest on capital. The codes are given over here, and your final answer will be number 3, that is, in the when agreement is not there, at that point of time only interest on loans and advances by the partners to the firm are entitled to the partners, and rest are not entitled to the partners because they are not written in any particular pen and paper. Rancho Limited took over assets worth rupees 20 lakhs from PK Limited and paying 30% and paying 30% through the bank draft and balance by issue of shares of rupees 100 each at a premium of 10%. The entry passed by Rancho for settlement will be, there are four entries given, four options, that is PK Limited debit, two securities premium account, to share capital account, to bank account, to statement of profits, and you can see the amounts beside written. This is journal entry number B. You can see journal entry number C over here, and you can see this D is another journal entry written over here. So the correct option will be B, because the issue price of the share is rupees 110. Issue price of the share is rupees 110, and the number of shares issued is 20 lakhs minus 6 lakhs by 110, that is 12,727.27. So since the amount cannot be issued shares in fractions, so 0.27 shares will be paid directly through the bank, that is rupees 30, and the payment through the bank will be 60 lakhs, 6 lakhs plus 30, that is 6 lakh 30. Question number 13. A company forfeited 3,000 shares of rupees 10 each on which only rupees 5 per share, including 1 rupees premium, has been paid. Out of the few shares were reissued at a discount of rupees 1 per share, and 6,000 were transferred to capital reserve. How many shares were reissued then? So for the calculation, after the calculation, we see that 2,000 shares is the correct answer. Question number 14. X and Y are partners in a firm with capital of rupees 18,000 and 20,000. Z brings rupees 10,000 for the share of goodwill and he is required to bring pro- proportionate capital for one third shares in the profits. The capital contribution of Z will be, there are four options given in the question. Now, the correct answer, the correct calculation will be the total capital of the firm partner after adjustment of goodwill is 23,000 plus 25,000, that is 48,000. A new firm's capital is equals to total adjusted capital into the capital reserve of the remaining shares. That is, let's consider the profit to be rupees 1. So, if the profit is rupees 1, then the remaining share is equals to 1 minus 1 third equals to 2 by 3. That is, the new firm's capital is 48,000 into 3 by 2, that is 72,000, and Z's capital will be 72,000 into 1 by 3, that is 24,000. Now, question number 15. A and B are partners. B draws a fixed amount at the end of every quarter. Interest on drawings is charged rupees 15% per annum. At the end of the year, interest on B drawing amounted to rupees 9,000, and the drawings of B were 24,000 or 40,000 or 30 or 80 per quarter. So the calculation is interest on drawings is equals to drawings into rate into average period into 12. That is, 9,000 is equals to drawings into 15 by 100 into 4.5 by 12. That is, if we do the crisp calculation, we find that the drawings is 1,60,000. Next, question number 15 on Sham, Gopal, and Arjun are partners carrying a garment business. Now, Sham withdrew rupees 10,000 in the beginning of each quarter. Gopal withdrew garments amounting to rupees 15,000 to distribute it to flood convicts. And Arjun withdrew rupees 20,000 from his capital account. The partnership deed provides for interest on drawings at the rate rupees 10% per annum. The interest on drawings charged from Sham, Gopal, Arjun at the end of the year will be, let's see the calculation. The interest on Sham's capital is rupees 40,000 into 10% into 7.5 by 12, that is 7.5 months into 12, that is 2,500. And the interest on Gopal's capital is 15,000 into 10% into 6 by 12, that is 750 rupees. So, interest on drawings is charged on drawings out of profit only, so it will not be charged on Arjun's drawings since he was withdrawn from his capital. Now, question number 16. On the day of dissolution of the firm, Rup Brothers had partners' capital amounting to rupees 1,50,000. External liabilities worth rupees 35,000 and cash balance 8,000, and the profit and loss is 7,000 rupees. If realization expenses and losses are 5,000 and 25,000 respectively, the amount realized on the sale of asset is book value of the asset except cash is capital plus liability minus profit and loss minus cash is 1,15,000, 1,50,000 plus 35,000 minus 7,000 minus 8,000, that is 1,70,000, and amount realized by sell of asset is 1,70,000 plus 5,000 minus 25,000, that is 1,50,000. Now let's move on to the next part, part B's this 1 marks questions. That is question number 27. Freedom to choose of method of depreciation refers to which limitation of financial statement analysis? Historical analysis, qualitative aspect ignored, not free from bias, ignore price level changes. The answer will be not free from bias. Next, question number 27. Or dash is included in the current assets while preparing balance sheet as per revised schedule 3 but excluded from current assets while calculating current ratios. There are 4 options: debtor, cash and cash equivalent, loose tools and stores and spares, prepared expenses. The correct answer will be loose tools are stores and spares. Now, question number 28. Debt equity ratio of Dhamaka Limited is 3:1, which of the following will decrease the result in the ratio? Issue of debentures for cash rupees 2000, issue of debentures 3 lakhs to the vendors from whom machinery was purchased, goods purchased for credit of rupees 1 lakh, or issue of equity shares rupees 2 lakhs. The answer will be issue of equity shares will increase the equity of the company and debt remains unchanged. Now, question number 29, statement 1. Sale of marketable securities will result in no flow of cash. Statement 2. Debentures issued as collateral security will result in inflow of cash. The alternatives are both statements are correct, both statements are incorrect, statement 1 is correct, 2 is incorrect, and statement 1 is incorrect, or 2 is correct. Now, C. Debentures issued as collateral security will result in no flow. Question number 29. Or what will be the effect of the issue of bonus shares on cash flow statement? No effect. Inflow in financing activity, inflow in operating activity, inflow in investment activity. No effect, because issue of bonus share doesn't bring in any money. And question number 30. Aditya Sunrise Limited provides you the following information: that 10% bank loan 10% bank loan is nil in 2023, and on 2024 31st March you have 1 lakh rupees in the information that is provided over here. So in that case, additional information that we get is equity share capital raised during the year is 3 lakhs. 10% bank loan was repaid on 1st of April 2022. Dividend received during the year is 20,000. Dividend proposed during the year 2021-22 is 50,000, but only 20,000 was approved by the shareholders. So find out the cash flow from the financing activity. So in that case, if we make a table and solve it, repayment of a 10% bank loan is minus 1 lakh rupees. Issue of share capital is 3 lakh. Proposed dividend paid is minus 20,000. So the cash from financing activity is 1,80,000. So the answer is 1,80,000. Keep waiting for the next video that is coming up for you all in the next in a row, which will be of a 3 marks question video. Thank you.